Okay, we'll start class now. I want you to pay attention regarding the class on the elements. So, hi to everyone, welcome back to another video session on macroeconomic indicators. So, in the last class, we have tried to understand not only the element called the national income and the methods of preparing or calculating of national income, but at the same time, we have entered how the macroeconomic indicators which states about the performance of an entire country at large. So in that we have come across with the important by listing of some of important macroeconomic indicators, and those identities are which are there. So first one called GDP, gross domestic product, net domestic product, gross national product, net national product, personal disposable income, per capita income, and personal income, net nominal income or national income, followed by the real national income. So in the last discussion, we have made up to the point of personal disposable income. See, personal disposable income, before letting into the deeper side of it, far better you understand what the income is. When any of a person, any of the national, when he earns some sort of an income, then out of the income he has to pay some sort of a taxes to the government. Till then that cannot be termed as a valid income. He can dispose only where he wants, where he wishes to dispose, when he pays some sort of a taxes to the government, like direct taxes. So for example, when any of a person earns some 10,000, then whatever the 10,000 he has earned, from the source he has to pay some of the taxes, which we used to call it as a TDS, stands tax deduction at the source. From the source only, when the person, when he pays some sort of a tax to the government, then the remaining amount of money will be known as a disposable income from the source of earned income. Then that is called PDI. Then this is a PDI. It can be calculated as like this: personal disposable income equals to personal income, or the income which is generated, personal income minus direct taxes, In simple, whatever the person has earned some sort of an income, from that income he has to pay some direct taxes to the government. And this is the thing which is directly deducted from almost all government employees, irrespective of state and central, in the name of TDS. If any of the income slab comes under the income tax slab amount of levels, then the amount of salary will be given to almost all state as well as the central body employees and all, which is termed as a TDS, stands tax deduction at the source, and the rest of the money will be given as a white money or valid money, where he or she can dispose anywhere they can. So that is called income minus direct taxes. And this is the thing which is also termed as savings plus taxes. Then savings plus taxes will be known as a personal income here. Are we clear? Then this is a point which we have stopped in the last discussion. Now coming to the next one, then that is called PCI, which stands per capita income. So this is another important macroeconomic element which deals with the performance of each individual of a country. Then that is called per capita income. Per capita income, PCI. So this is an income. Let's have a discussion with the first meaning, then we can go through the formula of calculation. Now coming to the point, per capita income, it's an average income of each individual of a country. Once again, per capita income, it's an average income of each individual of a country. In simple, we can say that it's an per head of income of a total population, which includes from a small child to the senior citizen. Everyone will come under this category. Then that is called per capita income, or average income of per head of population in a country, which includes the dependent as well as the independent, which includes kids as well as the senior citizens, which includes beggar as well as a millionaire and a billionaire. If the entire national income divided by the total number of population in a country, so what is an average of income of each individual, you, me, everyone, then that the income is called per capita income. Then that is an individualistic approach which is used to assess the individual financial performance in a country. In simple, per capita income, it's an average income of per head of population in a country, which includes you, me, and everyone. Then there's a formula which lies behind per capita income. Then per capita income, that's a PCI equals to national income. National income of the current year divided by total population. Total population. Some around assume we have national income around some 25 lakh crore. Then 25 lakh crore divided by 130 crores of population. Then what is an average income will be generated? Then that is on an average income of each every individual in a country, which includes even the beggar, even which includes small children, even it includes a senior citizen, even it includes you, me, and everyone, and it includes every person, even though if they are a representative body of earning point or not earning point or dependent or independent, on an average that will be calculated. Then that is called per capita income. Then this is the per capita income. If you go with the numerical side of it, then we will find some around 6,40,000, 8,40,000 is a per capita income of developed countries like Sweden, Germany, Japan, America. If you go by, then the per capita income will cross more than 6 lakhs or 7 lakhs of each every individual. Okay, like 6,80,000, 6,70,000, 8,70,000. On an average, the people of that country, the income will be that much. When you go by the per capita income in India, so we'll find when we divide it by the entire national income divided by total population in a country, then we'll find not more than 67,000 or 50,000 or 48,000 according to the national index of 2011. Okay, then this is a point which indicates where we are, and still we are hoping that we are comes under a developing country, and moreover God knows, are we still developing country or somewhere missed under developing countries. Okay, now coming to the point, so per capita income, it's an individual financial performance on an average per head of population income in a country, then that is called per capita income. And the formula is very simple, then that is total national income divided by population of the country of the current year, then that is called average income. For example, if you wanted to understand in a simple form, in a deeper side, okay, for example, assume your family members consist of some 6 members, and your father is the head of your family and earning some sort of 40,000. So 40,000 divided by 6 members, which includes a small baby to everyone. In such case, entire 40,000 divided by 6 members, then that is an equivalent to on an average income of each individual of your family. Then that is called average income. Likewise, the total national income divided by yes, is there any problem here? Called in the closure or circular flow of income, you people have come across with the different factors of production. Okay, is anyone can give an answer? Here the factor incomes refers to not only the land, labor, capital allocation that comes under the important factors of production, but when it comes to the factor services are the factor income stands rent, wages, interest, and profit. So personal income, it is that part of the national income which is distributed among the people of the country in the form of factor incomes, like in the form of rent, in the form of wages, in the form of interest, in the form of profit. Then that is called personal income. And once again, personal income, it is a that part of the national income. So it is about that part of the national income which is distributed among the people of the country in the form of rent, okay, in the form of wages and salaries, in the form of interest, in the form of profits, in the form of margins. So all these are come together is known as a personal income. Then this is a personal income. Elaborated formula is there which is guaranteed for 2 marks. Then personal income, that is a PI, equals to personal income equals to national income minus undistributed corporate profits minus undistributed corporate taxes minus social security measures plus transfer payments. So this is an actual formula which we used to apply in connection with the calculation of a personal income. So personal income is that part of the national income which is distributed among the people of the country in the different levels, like in the form of rent, in the form of wages, in the form of salaries, in the form of remuneration, in the form of interest, in the form of profit. Then that is called personal income. Like you and me, like your father, like your working man in your home, they are getting some sort of an income. It is that part of the national income. Either they have received in the form of working somewhere as a salary, either working somewhere as wages, either doing some kind of a business as a profit, either investing or somewhere as an interest, okay, as they are getting some sort of rent from the building in the form of rent, okay. So these are the different sources are there through which the people or the households have received income. Then that is called personal income. Then personal income that can be calculated in the form of this formula, then that is called undistributed corporate profits. In an entire country, whatever the company, factory, mills and will come, and in that whatever the amount which is not yet distributed still among the people of the country in the form of the profit, and the same time undistributed which is not yet given taxes to the government, and the social security measures. Like social security measures refers to like provident fund, okay, and you can go by pensions. Then those all the things will come under the social security measures. The next one we need to add the most important element, then that is called transfer payments. Far better you understand the word called transfer payments. Here the transfer payments refers to a person, a government or group of institution will give some sort of a fund or money to another institution without expecting direct return. Then that is called a transfer payments, like scholarships, like widow pension, like any kind of old age pension. Then these all the things where the government or institution or the person or factory someone will give to the society or to the needy without expecting direct return. Then that is called transfer payments. And this is to be added because it has been taken from the public and it has to be given in the public, so it should be considered in the calculation of national income in connection with the personal income. So it has been taken out from the personal income, so it should be added while calculating of personal income. So once again, transfer payment refers to the amount which is given by either individual, either group of institution, either government to the needy or to the some other person without expecting direct return, like the taxes, like road tax will give, okay, and you cannot hold the polar of the road so in charge executive engineer to make repairs of it. That is not possible. And even we pay some sort of n number of types of taxes to the government, and government will provide n number of scholarships to the students, and the government will never expect something from the student, and it's only the one side benefit which has been given to the meritorious students, okay. Then it doesn't mean that the student has to give the better the level, okay. And moreover, and this is an amount which has been given which is taken from the public, of their income, so it should be added in the calculation of personal income. And moreover, transfer payments are the sum amount which is given by the firm or industry or person to another person without expecting a direct return. Then that is called personal income. And make sure this is guaranteed for 1 or 2 marks, or even in your competitive exams in future, they want to ask why we need to add a transfer payments. If this is the case, then we are considering the next one, then that is called net nominal or net national income. So last two economic indicators are there. Then that is called first one nominal national income. Next one real national income. So these are the additional two more macroeconomic indicators which have been used to calculate the macro issues or macro financial performance of the country. At present index, whatever we have seen, the GDP has gone through for the minus level of 23. Then there is a point which deals with the nominal national income. So nominal national income stands, NNI stands, if the national income of a country, if it is calculated on present year index or current year index, then that is called nominal national income. So whatever the present year the output has been produced, from that output of aggregate outputs of the country, if the current year price index has been taken to explore the level of the income of a country, then that is called nominal national income. Like performance of the country's financial picture at present year index, price index. If the performance of the country, financial performance of a country by collecting of all the aggregate value of final goods and services has been taken on the base year index, which index? Base year index, then that is called real national income. Are you able to hear now? So nominal national income, it's an income which is calculated on current year prices, and real national income is a kind of that income which is calculated, the national income which is calculated on base year index. So on these type, the thing which gives exactly the picture of a country's performance, then that is called real national income. But the present one, which gives more or less not much of a reliable one, then that is called nominal national income. So I hope you people got understood after this macroeconomic indicators. By the next session, so we'll lead into the extended version of this concept called national income accounting. If there is any doubts, you people can ask in this regard.